Welcome back to The Pulse. Let's get into some business news now. Delta Property Fund says it's looking to shed more properties in order to manage its 4 billion rand debt. In its results for the 6 months to end August, the company says rental income declined by more than 9% to 573 million rand. Operational expenses were up 8.4% at 219 million rand. Delta Property portfolio is made up of largely government tenants with commercial and retail units, as well as the fund's portfolio is valued at around 7 billion rand. Joining us to unpack the real estate fund's latest numbers, we're joined by Delta Property Fund CFO Fikile Mhlontlo. Fikile, welcome again to Newzroom. Looking at this particular fund, can you explain what a sovereign fund is and the makeup of the properties in that particular fund?
The fund historically was set up to a large extent to support government with office accommodation. So where we are today, we are looking at 70% being sovereign, in other words, being supporting government. If you go out to KZN or go out to Kimberley, Bloemfontein, Western Cape, in all the provinces in the country, those offices are largely Delta owned.
Then looking at this particular reporting period, how was it for you in terms of the property market? We are in a high interest rate environment. Tenants can be different from commercial to the government that you're talking about. How has the tenants behaved during this particular time, given that we have those high interest rates?
What we've learned with COVID is that government is actually a good tenant. Even when we went through COVID, when other tenants were asking for some discounts or some kind of relief, government was there, was operating, the offices were used and were being rented. So government is a good tenant. Of course, if you say where we're coming from, where we are, and how tenants have responded to various challenges, including the sluggish economy, and certainly the industry in its entirety has suffered, but the industry is coming back. And we've highlighted quite an important point, which is also featuring in the numbers, the issue of interest rates. Interest rates are on the rise, and it certainly has affected our numbers. If we look at the sort of interest figure that we are looking at, and these numbers about 250 million, which means that if it was a full year, we're looking for about 500 million in interest costs in servicing the 4 billion debt that you're talking about.
Then looking at government as a tenant, you're saying they've been good since the COVID season, but of course Treasury has made it known that it's looking to go into spending cuts. Have you gotten those calls from government departments to say, can we relook our tenant contract and how much we could pay, given that we are going to go into a spending cut season?
So our space that we operate in isn't really responding directly to those kind of statements. But the nature of the agreements that we have, the rental agreements, are such that every 5 years the rent is actually being reviewed. Not necessarily 5 years, could be 3 years, could be 10 years, depending on the term of the lease. And naturally, those factors come in because naturally the rent would reduce.
Then the group's rental income going down by more than 9%. What was affected there in terms of rental income?
It's precisely the very point that I'm making, is that every end of a lease term, the rent is revisited, is looked at in relation to market, and we refer to that in the industry as reversions, and certainly it has been reversions, particularly in one of the provinces, Limpopo. We have had significant reversions that have affected those numbers.
Would that be department saying they would like to pay less rent?
It is the department saying we want to revert to where the market is. Remember, at the time of concluding an agreement, it will be based on what we estimate the market will be. So it will be a rent at a market rate with escalations. Going back to the fund, it's a good fund. It's geographically represented in the entire South Africa. But of course, we are restructuring. We are looking to reduce the number of properties to an optimal level, and that level will ensure that we are as profitable as we can be.
You're sitting with that 4 billion rand debt and obviously selling most of these properties to try and raise that cash? How is that process going?
The process is relatively slowish. Obviously, is influenced by the state of the economy. But what is interesting is, as you would see in the results, is that the offers that we are getting are in line with where the valuation is sitting, and that's the positive side of it. So we foresee doing this restructuring and disposal over a 2-year period or thereabout, and therefore use the cash that we raise to reduce the debt.
The tricky thing about letting the market know that you are selling properties is that people will sometimes take chances and say, let us offer them something that's below the value of that property and see if they actually sell it to us. Have you had those type of approaches in terms of people trying to undercut the value of the properties that you do have?
There has been a mixed bag in terms of the offers. We have had a lot of offers, of course, and certainly where that would necessarily result in us, discounting in a manner that's unwarranted, and then obviously those offers we don't accept. But again, if you look at our results, we have generally ended with disposals that are approximate the market value.
Looking at your other properties, you also have retail and commercial properties. Can you share which particular industries those are in and how they've performed over the period?
So we have office buildings predominantly, and those office buildings, at the bottom of those, they have the retail spaces, and those retail spaces are taking different sort of forms. In certain cases, could be a small clothing shop. In some cases, it would be a food outlet. So those are, actually we're seeing an upturn on those in terms of the level of interest. That at some point it diminished, and purely because of the state of the economy.
Then operating expenses were at 200 million rand. What was your biggest expense as a fund over the period?
So we got two categories of expenses. We got what we call operating expenses. Those are the expenses that are attached to the buildings, whether we're painting or whether we're repairing the roof, and those are the operating expenses. You'll see that in the results, that in the same period last year, they were sitting at 239 million. They are sitting at 219, which means there's an 8% improvement in terms of the level of where they are pitching, which is a good thing, part of our strategy to optimize our costs. But there's a second level called administrative expenses, and those where we also got support staff salaries and etc. And also that is only increased by 1.8%, far below inflation, which again means that the strategy of doing a couple of things, of leasing, of optimizing costs, and of disposals is moving in the right direction. Maybe the other important point is that what are these results telling us? They are telling us that the fundamentals of the fund are moving in the right direction at an overall basis.
One last point before I let you go. Your peers in the business are also spending on backup power. Is this something that you're doing for the government offices?
So we are sitting with the challenge of load shedding, and what we are then doing is we are spending in generators, because from a regulation point of view, there's a minimum level of power that has to be in the building. That's a starting point. We have to do that to make sure emergency lifts operate, emergency lights are there for safety purposes. But also, there are some tenants, depending on which departments, that would want us to give them backup power, proper backup power. We also do that kind of spending as well.
All right, that was Fikile Mhlontlo, the CFO Property Fund Chief Financial Officer.